According to supply managers in the 9 Mid-America states, how is the economy performing?
Well, the economy, according to our survey of supply managers in the 9 Mid-American states, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, the overall reading dropped to a still very strong 69.0, and that's down from October's supercharged 70.2, so it's very strong. But we are seeing some slower growth. We need to see more, of course, more of these strong readings before we get back to pre-COVID levels for the regional economy. 59.1% of the manufacturers reported an upturn in new orders from October to November. So that's very good. So all in all, it was a good reading up. But I think the overall economic upturn that we're seeing, instead of a V-shaped recovery, we're going to see more of a swoosh, a Nike swoosh or check mark. In other words, a sharp downward turn, and now a more moderate upturn in the overall regional economy.
What were the hiring trends?
Hiring is very strong, and if you see, I'll bring up the chart of the overall index, which reflects the hiring and other indicators for the month of November. And as you see in the blue there, you see the Mid-American upturn and sharp upturn there, and the U.S. number there in red. The number will come out later on this morning for the U.S. PMI, the U.S. Survey of Supply Managers, and I expect it to be down from last month as well. So we're seeing, at least according to slower growth. Now, in terms of overall hiring for the month, hiring for November was at 63.1. Of course, these indices range between 0 and 100, with anything above 50 as growth positive. 63.1 was down from October's 66.7. More than 1/3 of the manufacturers reported upturns in employment, and that's from October's readings. We asked this month about furloughed workers, and about 52.9% of the manufacturers reported they had hired back all their furloughed workers. So more than half of the manufacturers reported hiring back again all their furloughed workers. The regional employment still is down from year over year from last year at this time, about 4.6%. Now from pre-COVID levels, we're down about 4.7. So we got a ways to go before we get back to those pre-COVID levels of growth and expansion.
What inflation trends are you noticing?
Our inflation gauge for the month of November soared. The price gauge moved up to an 84.8, and that's well above October's 76.7. And I think we're going to still see an uptick in inflation in the second half of 2021. And we may even begin seeing it earlier than that, but I really do think it's going to be probably the final quarter of 2021 before we see any real concerns about inflation. And of course, we've got the stimulus package out there. If there's another one passed, that will tend to push up inflation a bit more. What we saw in our survey, we asked the manufacturing supply managers about health insurance, and more than 45.5% reported that their employer had increased their monthly cost of their health insurance, their contributions. So that really contributes, and that will contribute to more inflationary pressures at least at the wholesale level.
What impact is trade having?
Trade, the numbers were very good for the month of November. Exports were up to 75.0, and that's up from 58.4 in October. We had imports growing. What we're seeing there is the global economy is improving a bit. That's pushing up exports. And then the U.S. economy, the regional economy is growing, and that's encouraging manufacturers to increase their imports from their trading partners.
What are indicators to watch?
As always, at least during these last several months, keep an eye on the yield on the 10-year U.S. Treasury bond. That's been moving upward. It's now almost at 0.9%. That's been moving upward as risks come off. Look at first-time claims for unemployment insurance that comes out every Thursday. That number grew last week, so we'll have to wait and see what happens this week. But we are seeing an increase in those claiming unemployment putting down claims for unemployment insurance. Look for the employment report, which comes out this Friday. That'll be a very important report. I expect the growth to come down from last month. Look for progress on the stimulus package. That's going to be very important. What happens, whether this new stimulus package is passed now, or we wait till the new incoming Congress on January the 20th. Economic lockdowns, of course, that's big, very important. Georgia Senate election on January the 5th of 2021, very important indicator of what will happen in Congress. If the Republicans maintain control, as expected right now, that will mean a skinnier stimulus package, and I think that's the one we need to see.
What is the economic outlook?
The outlook is for slower growth in the weeks and months ahead. The Federal Reserve will do what is essential to underpin debt and equity markets. So that's what we're seeing those. The stock market, the bond markets have both been doing reasonably well. A slowdown in growth again, lockdowns will weigh on the national economy. Many states and local municipalities locking down, and I think that's a mistake, but we continue to see it. Keep an eye on short-term interest rates. They will probably remain very low, but at the same time, long-term interest rates are probably likely to increase in the weeks and months ahead. As I said earlier, the rebound is going to resemble more of a Nike swoosh or a check mark instead of a V. Inflation turns upward, but it's going to be a slow upward trend in inflation until we get to the second half or even the final quarter of 2021. And that's our report for the month. And until we meet again the first business day of January, may your economic cup runneth over.